Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Wednesday. Yesterday it was a real doozy. Man, like we got out and based on my general strategy, I would say that it was mostly appropriate when I got out, although I do think that I made a mistake because I thought, oh, this could just turn around, and really this was a move where I should have been waiting for the whole, trailing off and all that sort of thing. But it really moved really aggressively yesterday in the treasuries, and I think that we had a really significant shift yesterday, although we're not quite seeing it in the equity markets. So let me show you what I mean. First, we got to deal with some rollovers here. So when we come over to the treasuries, that was like a big reversal yesterday. I really don't know what was with the initial sell. That made no sense, which is why I reversed, and eventually they went higher. So look at the S&P 500. Yesterday, just kind of middled around. It wasn't until the overnight session that we moved lower. And even the move lower isn't like too huge. It just kind of retraced the move that everybody kind of didn't understand anyways. So let's just come look at other markets here. Oil still down from its decline yesterday. Gold and silver off of their highs. Copper off of their highs. And so what we're seeing across the board, we're also seeing a little bit of decline in Bitcoin, is a little bit of dollar strength, although they're still within the range, so it's not like anything too crazy yet. This whole kind of setup is really interesting because I really don't think that the Federal Reserve would be too happy about how easy interest rates are right now. Like the market is basically straight up calling out the Federal Reserve and saying, we think you're effed. This data says that we're going to go into a recession and that you're going to give in soon. So that's the market that we're in today. Now, one other thing I should point out just here at the very beginning, and because people are going to start asking me questions. I have an indicator that I've been working on. This is the Santa Fe model. So I'm showing you how many bid stacks and pulls and market buys and sells and ask pass at stacks and pulls that there are. So these 6 forces are basically the 6 forces of order flow that you want to watch. And we found a nifty way of representing it with these summary rows that is kind of a concept taken from a footprint chart. Right. So we're just going to run this today and see how it goes. But this is a feature that I intend on adding to my my paid indicator package. So it looks pretty cool there when you zoom out and you got the colors, right? So, but you can see that overall, not too much level 2 activity, and if there's anything going on, it's orders pulling out of the way of the market orders. So that's what that is. And I don't believe that we had any news here right now, but we do have the Bank of Canada rate decision at 8 o'clock is kind of the big one today. There is a 5-year note auction, but Bank of Canada, that may make the beginning of the action here this morning a little bit tight. Yeah. So I think we can maybe relax a little bit here at the beginning of the day. let's check Twitter, see if there's anything interesting. St. Louis Fed research. U.S. fiscal stimulus contributed to excess inflation of about 2.6 percentage points domestically. It was also associated with 2.3 percentage points in excess inflation in Canada and 0.6 in the United Kingdom. Oh, so the United Kingdom's problems are much bigger than that, huh? So about half of the this is actually a really important study, because there's been some question about like how much does monetary policy versus fiscal policy affect the inflation that we saw, and this study suggests that about half of it was the fiscal policy. Okay, so I will read that one later. Maybe I'll make a TikTok about it. Go back to an older TikTok video and I'll argue with people again. Man, last night, just before I was going to sleep, I came across this TikTok where this girl was like saying, oh, it's totally just a coincidence that all of the companies are laying off people all at the same time. I couldn't handle like I haven't been posting on TikTok very much at all because, well, partly because I don't feel like that the platform really rewards you. I feel like the whole thing is kind of rigged against you to get you on a treadmill to want to produce content and not actually reward you for producing that content. That's TikTok. And there's a lot of people on there that are just dumb, and so it's not as fun interacting there. But man, there has become like this category of misinformation influencer on economic matters where they're able to amass large followings on just the dumbest, most basic misunderstandings of economics. Right? Like, most companies move correlated with the stock market indexes, right? Like, most stocks are heavily correlated with each other. Okay, so if one stock is in a financial position where they have to lay off workers, probably other companies are going to be too, which is why layoffs all tend to come at the same time. This is like no dust stuff. I can't even imagine the perspective of a person that doesn't understand this. And I just couldn't handle it. I had to make a video about it. Let's see here. I updated my feeds to get the treasuries. How in the hell do the macros match up to the main contracts? I have to relearn now. The Newsy says micro treasuries move inversely to the main contracts. Okay, so you want the deep dive? I do have a video when the micros came out that kind of covers some of this, but obviously the Uzi is talking about the big one. When bond prices go up, yields should go down, and vice versa. But Steven's a smart guy, so I think that he's probably having issues beyond that, right? So here's the deal, okay? Treasuries are an actual deliverable. So when you get to the end of the contract, you are supposed to deliver a basket of treasuries, right? Well, they issue new treasuries every month. So which treasuries do you deliver? And the answer is that they create a basket. They say these are the exact QSIPs that you can deliver for this particular month, okay? For this particular contract, okay? There's going to be a bunch of them, and there's going to be one treasury that is going to be the cheapest or the most advantageous for the person delivering to use for delivery. And so that's the one that controls the price of the treasury, right? So if you're involved in futures and treasuries, this is an important thing to know. It might seem like it's like super deep in the weeds, but like this is an important thing to know, is that the treasuries are an actual delivery, and there's a basket of eligible securities that you can use. Okay. The thing that many people don't know is that when you look at the QSIPs of what is actually deliverable for ZN for the 10-year treasury, it's really more like a 7-year treasury, right? It's really more like a 7-year treasury. That's why they introduced TN, the ultra 10-year note, because of those the QSIPs that are eligible for that are much more like a true 10-year note. The 30-year is kind of more like a 15-year. And again, that is why there is UB, because that is more like a pure 30-year note. Okay? So you have to think about that. This is like a 4-year, a 7-year, and a 15-year treasury, right? What you get over here in the micros, on the other hand, is based on what we call on the run. So on the run is the most recently auctioned off treasury. Okay. So the main result or the practical implication of this is this. The micro 10-year is slightly more correlated to the 30-year bonds than it is the 10-year bonds. So you will see a lot of situations where it seems like the 10-year like really moved, but the micro didn't. And it's because like we're moving up and we're steepening, then the 30-year is going to lag. And so your 30-year and then your 30-year over here, and then to some extent your 10-year over here, this 10-year ends up lagging this 10-year. Okay, so that's the deep dive one. That's the deep dive on it. I also have a video about the treasuries in general where I kind of go through like what are the factors that influence them. And I have another video where I go into like trading the Federal Reserve as well, which kind of gives you like the cycle we go through with the treasuries. So that's the big gist of it. Now there's another video that I need to make, but I still haven't gotten to. But I will divulge that information here for you now. And that is, what is the correlations between things, okay? So treasuries tend, historically at least, tend to be inversely related to the stock market, okay? So if the stock market is going down, they will tend to buy treasuries and yields will decline. Okay. So these three things. Oh, sorry. I have Ziano open over here, not ES, but ES and ZN, they tend to be inversely correlated. But because we live in the era of easy money, they are often positively correlated. Which is to say, the Federal Reserve will come out and say something like, we're going to have easy money. And easy money means that you buy the treasuries and the yields are going to be low, right? Yields are going to go down and treasury prices are going to go up. And then the S&P 500 says, well, free money for everybody. We need to buy all the things. And so they also buy the S&P 500 up as well. So the correlation between the treasury and the equity indexes can shift depending on what the macroeconomic environment is, what the thing is that is pushing the markets. In other words, there are some economic events that create orders to buy in both the treasuries and the equity indexes, and there are some economic situations that create orders to buy in the treasuries and sell in the equity indexes, right? The other correlation that you're going to want to look at with the treasuries, and this is the really important one, is with currencies. So if I want to put my money into dollars, I'm not just going to come over and buy dollars because there's still inflation. And so the general tendency is for people to bring their money over to the United States and then put it into treasuries, right? So if the dollar is going up, the dollar index is going up, the tendency is going to be that you're going to see treasuries buy as well, right? The other side of it is that the Treasury is very correlated with the Japanese yen because the Japanese and Japanese pension companies in particular are the largest buyers of US Treasury securities. Okay. So if the Japanese yen relative to the dollar is going up, then you're going to tend to see the treasuries go up as well. Right? So no correlation when the inflation is high. Yeah. So in the, well, I mean, it kind of has been though, right? In this economic environment, it's been just sell everything, right? Nowhere to hide. I tell you what, the thing that's so funny about this, people say you can't predict the markets. That's total bullshit. It's total bullshit. And it comes from somebody that either A, doesn't understand the market, or B, is trying to convince you to give your money to them to manage. Okay? You can totally predict the market. This whole thing with like the inflation that we got and the Federal Reserve's reaction to it and the impact that raising interest rates have had on technology companies in particular, and the layoffs that we are having now in particular, all totally predicted by us 9 months ago. Like really. And of course, I'm always, kind of wishy-washy on things because there's still probabilities and risk management involved and all of that sort of thing. But in coming in and saying like the state of the overall economy is probably going to move in this direction in the next few months is very possible to do reliably even. The thing that is hard is translating that into expected returns, right? So even if you knew that the inflation was coming, unless you like all in on oil, you probably still were hurting. And lots of people, for instance, tried going into golds, didn't work out. A lot of people tried going into Bitcoin as a hedge against inflation, didn't work out, right? So calling the winner, like we knew what the economic environment was going to be, but choosing the winning trade based off of that was really hard. Isn't that interesting? But yeah, that's just kind of one of the things that I've learned over the years, is you can predict the markets, but making money on that is a different thing entirely. TCWorks platform that I use shows only micro 10-year yield market CME product to trade. Oh, that's interesting. Everybody keeps trying to convince me to get off of them, but I really like the micros just because you can control your risk so much, right? Well, when I look over at the treasuries here, I'm kind of like, is something gonna happen? Like, are they gonna move down again today? But then I look at the chart and I realize, they are just fooling around with the edge of the range and trying to get fills on the edge. So I don't know if anything is going to happen here or not. I think that we should see some decent movement today, but I'm not entirely sure which way it's going to go, because yesterday we saw pretty aggressive buying. I would expect at some point that the Federal Reserve is going to push back against that again, because even if we're going into a recession, the Federal Reserve can't be outright like, buy all the things, free money for everybody, yeah, right? But the Fed is in the blackout period. So even though Fed might be prone to try and smack the markets back down, it's not going to happen until next Wednesday. So what did they do in the meantime? Well, we got the Bank of Canada today. So I guess we've got 90 minutes or so, less than 90 minutes now, to watch this. And they could make a move going into the Bank of Canada decision. I'm not entirely, I think that I would be leaning towards the long. I would definitely be leaning towards, long in yields, short in prices. That does appear to be the trend that they're doing right now. the volume is kind of both ways. You can see here on my little heat map chart here that there's more buying here, and only recently turned into a sell. So the volume is still kind of two ways. Selling ES now. While ES did lose 4,000, and with them losing 4,000, there's probably going to be, at the very least, some short-term selling, because again, everybody thinks that number is important, and they're just going to go back and forth across it. And another thing that we should note here. So this is where it's like technical analysis is not very effective at predicting future price, and the things that they believe are just complete nonsense about it. But it's still worthwhile to follow the technical analysis and see what the technicists, or whatever we want to call them, are thinking. And so it's interesting to note that we never really got like a strong close above and like confirming candle, confirming a break of like the downtrend and everything. So there's probably going to be a lot of people here with the S&P 500 below 4,000 saying that that was a test of the range that failed, right? Even though I'm not too sure. So on a day-to-day basis, I think that we could get some big moves, right? Especially since we had a big move in treasuries yesterday. I think that volatility should continue through to today, and then we have the Bank of Canada. That's also going to lead to volatility. But like bigger picture, probably stuck in these ranges for at least a week, right? Until the Federal Reserve comes along. Yeah, well, it doesn't make me surprised that Tastyworks allows like the micro contracts and not the full size contracts. But are they actually letting you trade them? I don't know. I wouldn't, if you're going to trade futures, I would get a futures specific brokers, because those kind of all jack of all trades brokers, they usually don't give you as good of a deal on the futures. So. What the hell is this guy going on about? House GOP needs to get Yellen into hearings. They need to protect Powell from interference. This has been going on for far too long. What you talking about, bro? What you talking about? This was Live Monitor on Twitter. Powell maybe has two members that are on his side at the Fed. They stacked the rest with liberal-leaning members who have no problem playing politics with monetary policy. I don't think that's true. Please get her out of the Fed. Please let her go to the White House, where her life is 2 years probably. This is why Yellen decided to stay on at the Treasury. They need one in control of the money to help Dems in market manipulation. Brainerd does plenty to undermine Powell. I really don't think that Brainerd... What is this story? Fed's Brainerd, frontrunner for White House top economist post. Oh, that would take her out of running the Fed, though. I don't think you want to take Brainerd out. She's one of the more knowledgeable people over at the Fed. I know they've given her a lot. I guess they kind of have been priming her for, I guess I feel like that moving to chief White House economic advisor is kind of like a demotion, though, in my mind. Maybe not in reality, but in my mind. I don't know. So there is a schism in the Federal Reserve right now, to some extent, but to the degree at which there is a schism, it's still incredibly surprising to me how in line the different members of the Fed tend to be on things. So I really don't think that the politics are a huge factor in Federal Reserve decisions right now. I think that what's going on at the Fed instead is that they don't really, their models aren't precise enough for them to be able to kind of like get ahead of things, right? So they're always reacting and they're always overreacting. So you get these wild swings, and I feel like it's going to happen again. I think that they're going to be late. The economy is going to go into a recession. They're going to be late. They're going to bring interest rates down quickly, and then inflation is going to come back quickly, and then they're going to have to raise them back again, and then it's just going to be like, I'm concerned that could be happening, or that's in store for us. The S&P 500 is still looking quite bearish at the moment, man. There's decent volume behind the decline as well. PBS News Hour, and what would be a reversal of the Biden administration is poised to approve sending M1 Abrams tanks to Ukraine, U.S. officials said Tuesday. Have you guys been reading all this stuff about how they've been using so much ammunition in Ukraine and they've been getting it from the United States and the West to the point that like the US does not have enough ammunition now, and that if there was like a conflict with China, that they would not have enough stuff, and that it's taking too long to like ramp the production up. That's one that kind of like scares me a little bit, but then it's like nobody talks about it, so you're like, is it really as big of a deal as it seems like? I don't know. Kind of feels like it's a big deal. Oh boy, Jordan Peterson is gonna be on the Joe Rogan show this Friday. That's I'm sure he's gonna create a stir. Not admitting that Ukraine is a lost cause is gonna hurt. So, well, that's a difficult one to game out, really. I mean, if your point of it being a lost cause is that ultimately the Russians are going to overpower them, well, so first of all, we have to realize that whatever ends up being the final result of this conflict, it's probably going to be really complicated and nuanced, right? Like it could be that Russia takes over most, the territory that they want, for instance. Is that really a win for them? Oh, they got some territory. They were able to beat the Ukrainians back, but what it cost them wasn't worth it. So can you really call it a victory for Russia? Not really, right? So then the question is, was that worth it then? Was the amount of money that the West put into it worth it? I mean, the theory is that it would be. The theory is that, if you allow Russia to just do whatever they want without any consequences, that's a significant threat to both U.S. security and prosperity. Yeah, it would be a Pyrrhic victory. Exactly. So the other thing is that it seems very clear to me that the Ukrainians are never going to give up, right? So even if Russia had, say, taken over Kiev, for instance, that would maybe be the worst thing that could happen, because think about like a situation like Afghanistan, except for like way worse. like way more fighting back, essentially, because they've really effectively united that country against the Russians, right? So a quote unquote Russian victory, I don't think would necessarily be a victory at all. It would just be like the next phase, right? Does that seem clear though? It does. This isn't like any sort. Yeah, it's so hard because you can't get good information right now. Well, you can get good information. It's just not. I'm not finding it. You have to really be like the military nerds in the know. There are people online that do know how things are roughly going. The West's reactions though do seem like the West is unhappy with how the conflict is going, right? So if we're to game this out, whether or not the West should be spending the money and it's a good thing for them, is one thing. Whether or not it's good for the Biden administration is a different one. And I think that the big issue that you run into as the Biden administration is that in order to convince the American public that this was a good action, you need a victory. You need some sort of a peace deal between Ukraine and Russia where Russia leaves, and Russia doesn't really get very much or benefit at all. Something to say, see, look, we won and it was worth putting the money in. And it doesn't look to me like that's what's going to happen, does it? Right? So from like the tactical foreign policy, military perspective, maybe they're doing the right thing, but that could still come back and hurt Joe Biden in his presidency, right? That's kind of the thing that I see, because I think you're like, there's this big thing, which is like, how much money are we actually going to spend on it? Right? This is going to become a big issue sooner or later in the United States. It's just inevitable. The Republicans are going to push for it, and that's the way that those things tend to go, right? So, like, I could just, it happened with Afghanistan. It happened. This is just going back like the last 50 years now, right? Because it happened in Vietnam, it happened in Afghanistan, it happened in Iraq, where eventually the public gets sick of spending the money. The American public is never on board for a long-term war, even though that's kind of the way that it works now. Right? Well, we did get like a little bit of a pullback, and then they kind of pushed down to new lows, so I kind of feel like that maybe we missed a really good opportunity. I think, to me, the thing that I find disappointing is that Russia has a lot of unique things about it that would be really valuable to the world, but because of one guy, we don't get to see them live up to their full potential. I find that really frustrating, because I remember the beginning of all this, like back in 2010, wanting to be invested in Russia, and then all that shit happened. They started not playing nice. Kind of seems to me like the bids are acting a little bit scared. You see right here down below us at 115.01 and 00 half, which was kind of a key rebalancing point after yesterday's up move, right? There's not much liquidity down there. You don't see anything even remotely close to that anywhere else on the DOM. That's a very unusual. You're also seeing the offers in the micros being a little skittish. Like, it's not taking very many contracts. You know, it's just like even one contract comes in and they pull. Okay, well, there is some bid at 03, so we'll see if they slice through it. Right now, it looks like they're kind of going back and forth at 03 half. They did take 03 half offer for a second, but nothing hit into 03. I am detecting a hint of some stacking on the offers here, but I tell you what, I know the difference between it's and it is, but my fingers seem to not. I always get the comma wrong for some reason. Having a good conversation in Discord here this morning about moving averages and stuff. Seeing a little bit of a bounce there in ES. Are we seeing a shift in the dollar? The dollar did kind of reverse recently. It kind of feels like they're playing games with me. The volume to the downside looked really strong for a while, and the flows seem to be turning very quickly. Man, it's funny when you can tell that certain celebrities are on the Twitter, you know, and like they just, like Jordan Peterson right now is tweeting a bunch of stuff. You think long on market open? That's a gutsy call. So just a question. You guys know that the Bank of Canada decision is at 10 o'clock Eastern time, right? So I personally do not have the balls to try and make a call about, especially what the S&P 500 is going to do before the Bank of Canada decision. On the treasuries here, I think that the Bank of Canada looming on us could be a bearish force. But so far it has been the trend has been to the sell side, but it's still pretty wishy-washy, you know? Long it is. They were a little bit more dovish last time, weren't they? So it could go either way. Thing is, they're almost certainly going to do a 25 basis point increase. That's, what are they going to say? That's going to be the interesting part, right? There was an aggressive. There must have been some earnings. Was it really AT&T? You left Twitter? You know, I tell you what, Twitter as a social network is the least interesting social network, right? Because it really is like everybody shouting out into the void and hoping that somebody else is listening. And, you know, why is it that certain accounts that aren't already celebrities get the followers and become those people that get followed? Like, I'll never know, because there just doesn't seem to be a reliable way to build following on Twitter. Yeah, I mean, there's Twitter is important, and as a place to like disseminate information, especially live information, it really is like the best suited for it. But like I said, as a social network, as a place to go and be social and like make relationships with people and stuff like that, it's just absolutely terrible, right? I thought that TikTok was going to kind of fix that. TikTok looked to me like, you know, Twitter for video, where because of the intimacy of video, that you could kind of build these communities and stuff like that. But as TikTok has gone along, it seems to me that it is not that. It seems to me like maybe it could have been, but that TikTok put their finger on the scales too much. They basically they kind of throttled certain creators and stuff, so that because they thought that it would make them more money, right? And so it's because if somebody follows you, they're not more likely to receive your TikToks, from what I can tell. I mean, there probably are somewhat, but it's not really. Like, if I put out a video, I have like almost I think I have Oh wait, where are we? We're at 8K. We're almost at 8K here. Oh no, we're almost at 10K, aren't we? On YouTube. And over there, I think I'm somewhere like 5,000 or 6,000, right? So you would think if all of my viewers saw my TikTok that I would get like 5,000 views. But most of the time, my TikToks have difficulty getting over 1,000 views, right? So having the audience doesn't help at all. And so what that means is that like the people commenting on my TikToks and seeing them and stuff, it's different people every time. And so there's no community in it. No community in it at all. There's a very serious detrimental effect to placing everything on the algorithm to optimize for engagement. And YouTube has been able to avoid that. YouTube is the only platform that says, "Oh, our creators are really important to our success." I'm not going to say that like the algorithm and everything is geared to the advantage of the creator. I really don't think that it is. I think that if the optimal thing for the creator would be creator creates the content that they want and the algorithm is able to find the audience that would be interested in that stuff. But that's not how it works, right? The algorithm optimizes for the engagement and keeping people on the platform, which is not what you want for certain types of, certain types of content are disadvantaged by that. Right. So it's kind of this kind of couple of different things going on there that we covered there, right? One is that some of these networks just aren't very good for social interactions in general. And then the other side of it is that platforms kind of shitify their platform to make money. So that's what happened on Facebook. I think Facebook was like great for community in the beginning. And then they came in and they said, "Oh, we'll only show your stuff to like 10% of your audience." Kind of ruined the point of the whole thing, because the cool thing about Facebook was that you could use it as a platform to distribute content to a wide swath of people very easily, and including your friends. And so you could really leverage your existing networks. And then when they got rid of that, or you had to pay to get any kind of reach whatsoever, then that defeated the whole purpose of using the platform. Yeah. Minimal says the majority of users understand that, though. I mean, US use is worldwide. I need to have an idea of what's happening, good or bad. I find out on Twitter quick, and YouTube pays creators with ads. But the question that I'm asking is that, does it really need to be that way on Twitter? Could it have been that if the way that the tweets were shown to you and the extra features that they had added had focused more on creating small communities within Twitter rather than optimizing towards helping out the celebrities? So I'll give you an example. There was this clone. So when Twitter came out, oh man, it was so interesting the time that Twitter came out, because like there was Facebook, right? Facebook was first, and all of the everybody was looking for the next social network sort of a thing, and microblogging became a thing very, very quickly, right? And maybe it was just a coincidence that Twitter ended up being the one that came out so fast, and once Twitter kind of won that war, then everybody kind of started to try and copy Twitter's business model, right? So there was a bunch of micro blogging service clones of Twitter, right? And the one that I'm most familiar with, at least, I don't know if it was the most popular or prominent or whatever, but was Pounce. And Pounce was basically a bunch of the key people from Dig went and wanted to make a social network. So it was Twitter, except for you could post longer posts and you could attach files. And attaching files was the key feature of Pounce that made it unique, right? Pounce had a really great community. The people that used Pounce interacted with each other a lot. And there was a lot of helping each other out. Here's a person that had a piece of content. You should go and check out that content because I think it's cool. And, you know, like creators helping each other out, right? That was Pounce, right? So my point is that Twitter could play out differently with some small tweaks, right? Because Pounce, they made those small tweaks, and maybe part of that is just how you run your community and the attitudes of the community. But Pounce pulled it off the way that I think it should be done. Dig. Dig really frustrates me. So in the end, what killed Dig was subreddits, right? Because in the beginning, Reddit was really just a really shitty dig, right? But the whole thing was that the guys at Dig didn't want to give up control of the categories. And Reddit said, oh, we'll let anybody make whatever category they want. And that allowed niche communities to pop up on Reddit. And that's what ultimately defeated Dig, I think. Of course, the other side is that Dig kind of defeated themselves because there was a couple of like bad decisions that killed the website. People were still using it. It was like they had lost the feature edge, but people were still using it. And then you come in and you do something like you change the interface in a way that people don't like or something like that. And then it really died, right? But the Dig algorithm was better. Holy crap. Dig was a website that everybody could go on and enjoy and find content every day that was unique and special and interesting, right? Reddit is not that at all. Reddit is an echo chamber of far left wackos that have basically what is the word, encumbered. They've dug their way into all of the administrative positions on the major subreddits and then enforced their ideology on the subreddit through very, very subtle moderation to the point where the group of people that are most engaged on Reddit are just like crazy. There's some, yeah, when you really start digging in on Reddit, there's like some crazy things about it. A lot of the users there are like really straight up nuts and have more influence on the internet than is healthy for them to have. What is with the 10-year chart in the upper left? So I have been working on a new indicator. So somebody requested an indicator that made use of these summary rows down at the bottom. So if I zoom in here deep enough, it will show you the numbers, right? The metrics that they were looking at was different. But when I started testing their indicator, you know, I zoomed out and you got the colors. I was like, oh my gosh, that is so cool and interesting and possibly useful. Let's see if we can use that on our Santa Fe model, because the issue with the Santa Fe is that you've got like 6 data series that you're trying to keep track of, and NinjaTrader doesn't let you add like 6 different panels for different indicators, right? So to do it, it would have had to have been like 6 separate indicators that you add to the chart, and then a strategy that you add that adds them all or something like that, you know, and it just wasn't attractive. But with these summary rows, it kind of gives you a visual way of showing it that is quite interesting. So that's what that is. So this is the first day of testing it. I might need to make some tweaks to it, but it seems to be working pretty well. So what it's showing you is how many orders pulled during that time period, how many orders stacked during that time period, what were the market buys and the market sells. So those 6, and then buy and sell versions of those. So the basically the 6 different actions that you can take in the market is what it's showing. So you can see that, like, on relative basis in level 2 activity, there's not actually too much going on right now. There is some interesting action going on with the market orders, but it's not all one-sided. They're kind of going back and forth. So this may be a market that's just kind of in the range, waiting for the Bank of Canada. It kind of looks like right there that we just pierced the low, and like they're already rebounding, right? You can see in a couple of key locations orders pulling though. There was, when we got down there to the low, there was some orders pulling, but then it's like the sell pressure let off really quickly. So yeah, it'll be part of the paid suite at some point. Maybe soon, because it seems to be working correctly. I would like to see like a really big spike in level 2 activity here first, to see how that all works out. So not as much activity on here. This one right here, that bid pull, there must have been like a really large order really far away from the market that moved that. So it might make sense for me to change my filters on here to only look at prices that are close. Top 10, no. So right now it is like the whole book. So it has the filters so that you can say, only look at orders that are this big, only look at orders that are this close. But I'm not using those right now. I'm looking at the whole book. I'm gonna bet that these big pulls on both sides are probably ones that are happening like 32 ticks away. So it might make sense for us to filter those. Filter it to only like the closest 10 prices, for instance. You found top 2 useful? What about GDP tomorrow? You know, I hadn't really thought about it. Let's go and see what the estimates are. So tomorrow we get advanced quarter-over-quarter GDP. They're looking for a reading of 2.6% versus a previous reading of 3.2. I have a hard time seeing that number being 2.6. I don't know what to think about that, man. Either that estimate is really, really wrong, or the number is not going to be very influential because people feel like it's too backwards looking. But usually GDP is a decent mover, so like it's usually a I would probably put it at a tiger level release. It's not like one that they just pass over and nobody cares about, but looks like many politicians have classified documents. Pence, Biden, Trump. I don't know what's with that. Yeah, it seems to me very unlikely that all of a sudden a bunch of politicians would have documents found at their house when that was never a thing that anybody cared about before. And something that, listen, if you went to Bill Clinton's house, I almost positive you would find documents, okay? Almost positive, right? This was always something that everybody knew presidents did and just looked the other way because they didn't think that it was a big deal. So now all of a sudden it is a big deal. It does kind of make you wonder if, you know, deep state shenanigans of sorts are underway, you know? It kind of makes sense. Like, okay, you do it against Donald Trump, and then somebody else says, oh, well, we can do it against Joe Biden. And then, hey, why not Pence too? That just muddies the waters even more, you know? Oh, I guess Hillary did, you know, I guess we already found Hillary doing that to some extent with her emails, huh? So do I have to go back further? I bet you if you went to President Carter's house. Into the recent market sell-off and what? Are you talking about the S&P 500 this morning? I don't think that there's really too much to the sell-off overnight in the S&P 500 more than maybe just shifting sentiment, right? Like the treasuries shifted quite bearishly yesterday, I would say. There was really like a big change in the treasury market and you didn't get it in the equity markets. And so maybe now the equity markets are just catching up. Might be part of it. But I don't think that the decline in ES is significant enough yet to warrant, you know, it really doesn't make me go, this might be a big deal. You know, it's still kind of in the area that it was, and I expected them to toy around with 4,000 for a long time. So it wouldn't surprise me to see a down day in the S&P 500 followed by, you know, a bullish return back to 4,000 tomorrow. They could go back and forth like a ton. Now, the caveat would be Bank of Canada decision today that might shift the markets. Well, that move up in the treasuries seemed a little bit more aggressive. Yeah, some volume coming into the 30-year. I think that they're giving me the spreads coming in that I should take advantage of it. Yeah, okay. That's kind of interesting. Is it like, are we getting the panic bid coming in again? Do you feel the Fed? Well, of course. Do you know that the heads of all of the central banks from the major G7 countries, G9 countries get together once a month to discuss monetary policy? Once a month? I forget what the name of the institution is that they do it at, but they get together once a month. So yeah, they absolutely know what each other are thinking and so forth. And I would even say coordinate their moves to some extent. I'm thinking on that trade that I just took, I wouldn't rate the entry on it as the worst entry ever, but it wasn't very good. I didn't get very many positive ticks on it, right? Only got like 2 positive ticks on it. And overall, I think that the trade setup and everything was okay, and it was just wrong. So I don't think that I want to take too many risks like that in a day. But, you know, I did the one and we were wrong. We might be able to just kind of chill for the next 30 minutes. See what happens. I would love to be a fly on that wall, yeah. I've seen pictures of like the inside of it is like crazy. Insane. Well, I mean, I almost hesitate to say what I'm going to say because it's like something that people will latch on with conspiracy theories, but I'm going to do it. So, you know, I live in Utah. I'm an LDS person, right? And so one of the things that Mormon Church does is they build temples. And the inside of the temples are very, very nice. Like, they are really quite impressive. You know, there's like gold leaf on everything, and each temple is different, but they're very nice. But it's nothing compared to the ballroom in Goldman Sachs 200 West building. Right? Like the top financial institutions in this world, when they build something that they want to look nice, it's nuts. Like, the craftsmanship and the materials that they get are just things that, like, you won't find anywhere else in the world. And that is the case of the room that the Federal Reserve Open Market Committee meets in, and it's true of the institution that the different central banks kind of meet up and share information in. Yes, that's it. It's the Bank of International Settlements, based in, I think that's correct. Basel doesn't sound right to me, but yeah. It's like super low key. It's like the most powerful institution you've never heard of before. Yeah. Not that I think that they're trying to hide anything, but like, they don't really have much of a reason to be very public facing. So yeah, I don't like that move. When I'm looking at this, what do I see? Choppy market, extension of the range, extension of the range. Will the trend continue up from here now, or will they shift back down again? It kind of looks like that they're I'm detecting a hint of flight to safety bid, though. Like, the yield curve is steepening, and I could have noticed that the yield curve was steepening and maybe limited that loss to $5, but I kind of thought that they must be going hawkish this morning, because I don't think that the Bank of Canada is going to be dovish by any means, you know. But I guess we'll find out in about 20 minutes. I think that was way I'm just saying, slightly more speculative of a trade than I would like, and it didn't work out. Crude was trading really bad this morning. Well, it's really choppy over there this morning in oil, but they did have a decent down day yesterday. This is like, again, it coming back. So for those of you guys that missed like the start, you know, when you come and look, the treasuries, well, on a relative basis, that move doesn't look too big, but that was actually like a really monster shift. That was like 5 basis points there. Now a little bit higher. And then when you look at how ES reacted to it, ES was fine the whole day and barely budged, closed up yesterday. It's only been, this downside has been overnight, right? But it doesn't really make sense, because every other market was heavily influenced during the day. You know, like oil, for instance, took a big hit yesterday. So it's really odd to me that all of the other markets seem to have a significant shift, but oil did not. Or sorry, S&P 500 did not. Oil did. Oil sold. Yeah, so it was looking really bullish there. They've kind of pulled back a little bit. A lot more downside for you guys. It certainly has the potential for it. Again, I'm skeptical about the S&P 500 moving too much before the Bank of Canada decision, and I'm really curious as to why you guys all seem to be wanting to stick your neck out here. What is it about now that makes you think now is a good time to stick your neck out on the stream and say what you think is going to happen? Oh, Zach, you plan? You know what, Zach? I appreciate the subscription, but you really don't need to do that. You know, we set the subscriptions up for you know, originally for the indicator package was the main draw of it then. Right now, you're not getting a whole lot from the subscription, so I was really, I mean, if you want to be nice and you want to donate to the channel on a regular basis, then go for it. But I'd much rather people buy the NinjaTrader indicator suite, you know, and get something that really provides a ton of value to you. You know, and that will continue to provide value for you for years and years, because there's really important key pieces of information that I think everybody should be kind of keeping an eye on that you don't get by default for whatever reason. Don't use NinjaTrader 8. Are you using well, I maybe someday I'll branch out to other platforms, but I really, you know, it's kind of an interesting thing. It's like the things that help the channel out the most are not necessarily the things that we would expect, right? Like the thing that seems to help the channel out the most is commenting on videos. If you really get a conversation going on in a video, that boosts it so much, guys. You have no clue. Like just go and start arguments in the comments, man. I maybe I need to go back to doing slightly more controversial videos. You know, we made some controversial videos back during the elections because, you know, like the videos that we made about Andrew Yang attracted a lot of attention. But they didn't really bring in very many subscribers, and that was why I kind of stopped doing it. But we could go back onto key economic issues. Maybe I should make a video about, oh man, should I do this? I think that I would need to really be thorough on a video of this nature. Build something in Bookmap. I could do that. Bookmap is becoming more and more popular these days. So here's this one. Okay. Like, things are rough for a lot of people. And it's not just that there's a recession, okay? For a lot of millennials, the last, 15 years have been rough, okay? Why is it so rough? Right? Everybody has a different opinion about what are the economic factors that are currently affecting us right now. And one of the big ones is that people say, well, you're not getting paid enough. Okay, that's based on falsehood. Okay, what's really going on is Obama screwed millennials. Obama screwed millennials. Okay, it was Obama that put in Obamacare and skyrocketed the costs of healthcare in the United States. It was Obama that came in and basically took over the student loan industry, making education costs skyrocket. And it's been some of the reaction to the financial crisis that Obama put in place as well that has disincentivized investment in building new homes that is making the cost of housing be so high. Okay. So in order to explain that, though, we kind of have to destroy the myth that's going around. And there's a myth that has been perpetuated by the Democrat Party in particular, because they want you to think that the problem is those greedy corporations and that we, the politicians, are going to help you and get what's yours. They don't want you to go and look at your costs, right? So what is the myth? The myth is that wages have been stagnant since the 70s, right? Have you ever seen this chart where they say, here's what productivity is and here's what average hourly wages are? And the wages have basically been flat even though productivity has been increasing. Okay, that chart is complete bullshit. It's totally false. So what's going on here? Well, first of all, a lot more of your compensation today comes in the form of benefits compared to the 70s. All right, especially since so much of your money is coming out from healthcare, right? Okay, so you can't look at wages. You have to look at total compensation, because that's what you cost to the company, right? So you have to look at total compensation. The other issue is that these metrics, you have to adjust for inflation, and different metrics may adjust for inflation in different ways. So you can't use average hourly wages, which are adjusted for one inflation metric, and then productivity, which is adjusted using a different inflation metric, and then plot them against each other. It doesn't work, right? They need to be adjusted by the same measure, right? So when you kind of combine those things together, and there's a couple of other things, if I made a video we would go into, then you'll see that actually total compensation has been perfectly in line with productivity, right? So essentially companies are spending the same amount on employees as they typically did. Of course, there's more nuance than that, because it kind of depends what time frame you're talking about. It depends on if you're talking about the low end or the high end of the income scale and all of these sorts of things, right? Okay. But here's the thing that's been kind of broad across the board. Healthcare costs have gone up, education costs have gone up, housing costs have gone up. And guess what? Obama played a part in all three of those things. Why is it? Why? Like, ask yourself, why do Democrats focus so much on the taxes and not doing anything about these bills of yours that keep going up every month? It's really, like, especially for housing, if you're not in a house already and you're like renting, and like the amount that rent keeps increasing and stuff, it's nuts. Absolutely nuts. Healthcare, absolutely nuts. You know what's so funny to me with healthcare was that the whole battle in our healthcare, the whole reason that we needed to change it was that you'd have a situation where somebody would lose their job or otherwise had a lapse in their healthcare, and then because of that lapse, their pre-existing conditions were no longer covered. So it would be like you got cancer and you lost your job, you couldn't afford the COBRA insurance, and so your insurance lapsed, and then they wouldn't care for the cancer treatment, and the cancer treatment is like bankruptcy, right? Okay, so the way around that is you have to pay for the COBRA insurance, and the COBRA insurance was expensive. It was like twice as expensive as your regular insurance, right? And the thing that kills me is that the COBRA insurance was less than what I pay every month for my healthcare now for a family plan. Absolutely insane. Republicans had a chance to repeal Obamacare, and they couldn't get it done. That's what's screwing millennials over, guys. Costs. We could make a video about that. It'd be controversial, right? Andrew Yang's controversial $1,000 per month to U.S. citizens now sounds good to me instead of billions to Ukraine. I Man. I really find it interesting how much people underestimate the impact that such policies have on people and their behavior. Just consider for a moment, they gave us like what, $500 to $1,000 checks like 2 times during the pandemic, and look at how much money people went out and wasted on frivolous things. Like in the long run, it wasn't a good thing for the economy, was it? It created a temporary burst in spending, but none of that capital was effectively allocated. It went from the middle class right to your corporate overlords. Nobody kept it. I saved it. Very, very few people saved it. And the people that did try and save it, they probably blew it on the stock market and, lost most of it, right? They've shown that the allocations that happened post-COVID from like that retail surge has basically all completely unwound. That retail traders have basically taken it all back out, right? Okay. Now imagine doing that every month. Every month. Okay. It would have a huge transformative effect on American society. And I'm telling you, it wouldn't be a positive one. Would not be a positive one. Like, you think that people are kind of nihilistic now? Give them $1,000 a month. It just gets worse, I promise. And it would drive inflation too. No thanks. No thanks. Well, here's the issue. We talk about, like, can we talk about debt? We have a really unhealthy relationship with debt in this country, man. We have a really unhealthy. What do you think about AI taking jobs? It's overblown. Sure. Artificial intelligence does not bring down the value of good content, but what it does do is it brings down the cost of bullshit to zero, is what it does, right? So people that are actually doing sophisticated things and solving problems and really doing something at their work have nothing to fear, and the people that aren't doing those things should be happy, because that just means that there will be more opportunities in the future for them to transition to a job where they're actually doing something instead of mundane things. So I think it's overblown, man. So debt. Let's talk about debt. The United States has an unhealthy, and I'm not talking about like, oh, we keep taking out money and adding to the debt ceiling. I mean, we'll get to that in a second, but I'm just saying that people's personal relationship with debt is really messed up. Okay, so generally speaking, in the United States, and especially conservative people, are told that debt is bad, right? We're all told, like, for instance, in my community, we say you don't take out debt that you don't have to. So you can take out debt for your car and your house, but you really shouldn't take out debt for other things. I believe that approach to debt leads to an unhealthy relationship with that. So why do I say that? When you take on debt, the way that you need to think about it is, I am printing money. That's what you're doing. When you take out debt, the bank basically prints money for you. They make it out of thin air. When you take out a loan at the bank, that's what happens, right? It's not the fractional reserve stuff that they told you. It's an oversimplification of what happens, right? But at the same time, it's also kind of an overcomplication of what happens, because what happens? They print the money and then they give it to you. Okay, you're printing money. Okay, anybody can go and print money. There's only one caveat: you have to pay the money back. That's it. Is that you have to pay the money back within a certain time frame. That's all they ask for, right? So you can print as much money as you want, as long as you have the ability in the future to pay it back. Okay, so from that perspective, think about The Federal Reserve, they come in, they print money, and what happens? Everybody buys things, the economy goes up, it helps, and GDP growth increases because they printed the money, right? So what is money printing really? Money printing is leverage. Money printing is leverage. So this approach that debt is always bad, that you don't want to have any debt, is really a negative and harmful approach to debt. Because if you have no debt, what it means is you have no leverage, right? And you're very unlikely to be able to accomplish all of the things that you want to do in life without leverage, guys. Just straight up. So yeah, there are some things that you take out debt out on because you basically have to. You have to have a place to live and you have to be able to travel, right? But if you're going to take debt out after that, really what you need to be asking yourself is, what am I going to get back from this, right? You can take debt out if it helps your business, as long as you know that the amount of money that your business is going to make because of that investment is going to be more than what you have to pay on that debt, right? Like, that's the approach that we need to take. So essentially, every time that you're taking out debt, you need to be taking the same kind of analysis that you take when you're doing an investment, right? So you need to be saying, am I actually going to get a return on my money because you're paying to print money, essentially, right? So are you actually going to get your money's worth from it? Okay. So that's why we have this unhealthy relationship with debt. And so Americans, when the government is spending our money, they don't sit back and say, okay, we're taking on debt. Am I getting my money's worth? Am I getting my money's worth? And I say, hell no, you are not. Hell no, you are not. Most of the things that the United States government puts its money into are things that don't give us a return. And they don't allocate it very wisely. You know, like if we say we have to, so the military could kind of be thought of as in a similar place in your personal budget as like owning a house. You have to have a military to protect yourself against foreign aggression, and there's a reason why, like, it's built into the Constitution that that's one of the things that the federal government has to do, right? Have a standing army, okay? But if we're going to spend that money, are we spending it effectively? And the stories that I've heard of waste and abuse in military and military contracting and everything is absolutely insane. Absolutely insane. They are spending so much more money than they need to. They do not use the money effectively, right? If the United States had a more healthy relationship with debt, then more people would come in and ask, why are we using our money so inefficiently? Yeah. I'm trying to be controversial. Am I controversial enough there for that? It's the banks that print the money and not the Fed. That's true. That's true. The Federal Reserve basically incentivizes or de-incentivizes the banks to print the money through changing interest rates. Yeah. That's basically what happens. I would say that it is inaccurate to call what I just said a perspective. A perspective would be like, this is the way that this person perceives the world. That's not what I'm saying. I'm saying here are a couple of facts. Based on my facts, here is the thing that I think people should be paying attention to the most. So it's kind of more of like a theory than it is a perspective, right? All these monetary and fiscal issues you're discussing are all leading to de-dollarization and the eventual implementation of new programmable currency, it will be no. Because when they propose a new digital currency, it will just be an extension of the existing monetary system. So a digital dollar won't have any impact on the debt, for instance. Right? Might allow them to do certain things. It might there might be some real benefits to it. The whole thing about a digital currency is that there would be, I think, some real tangible benefits to a digital currency, but they would not, the benefits that you would get would not be necessary things. You know, like for instance, it would be really useful to be able to go onto a blockchain and just see every transaction that's happened in an economy. Okay. Like would you be able to do some cool things with that kind of an analysis? Oh yeah. Oh yeah. But do we have to have that? Nah, not really. It's kind of a luxury, you know? And then on the other hand, there's all these things that you could put into it that would be very, very negative for people, you know? Take away your privacy and a digital man. So here's the Bank of Canada decision. I want to keep talking even though it's moving, but we don't really want to do anything with it yet. We kind of want to let that pass us by. They did hike 25 basis points as expected, and it does look like there was some bullish uptrend off of that news. So it looks like the correct call on that one was indeed long, as the volume was kind of in the direction of going. Anyways, what was I saying? Yeah, the benefits of a digital dollar are kind of luxuries, and the potential to abuse with a digital dollar is immense. So I'm not necessarily opposed to a digital dollar, but I'm super skeptical that they're actually going to do it in a way that is okay, right? But yeah, it would be nice to have money clear instantly. It would be nice to be able to have a wallet without having to deal with the bank. Investment idea, chicken coops. But Lafta, the problem is that the cost for chicken food has been going up too. I have a bunch of chickens and I haven't been able to take advantage of this at all because it's been so cold. The chickens aren't laying right now. Need to go get a light. Need to go get a light for them. See, I wish that I was I had all of these extra eggs like I did earlier, and I was selling them and making hundreds of dollars from selling eggs, and then I could make a YouTube video about how I became a millionaire selling eggs. Well, there was a whole lot of movement. We're basically where we were from before the news. It kind of sounds to me like the Bank of Canada is kind of very much trying to shift into, okay, we raised rates now. We probably want to keep them around this. We probably want to keep them around this level for a long time. So. Well. We'll see if this uptrend continues through. They might push back a little bit higher. I saw an opportunity there to catch the edge, so I took it. That's about as good of an entry as you can get. Oh, and there you go, a little bit of continuation. Oh my gosh, Andrew Tate quoting the Quran this morning. You know what I think is really funny about that whole Andrew Tate situation is that the group of people that seem to support Andrew Tate, you know, I think that most of those people would probably not like that he's Muslim, essentially. Isn't that ironic? Well, that's kind of this bizarre thing that's been going on for a long time, is that, you know, Islamic people have much more in common in terms of morality and values with American conservatives. But American conservatives really don't like Islam. And so, you know, if you're in the United States and you're Muslim, you're more likely to vote left. So it's funny. Tribalism. Like one of those situations where tribalism affects how people vote, even though it doesn't make sense based on their ideology. So they did extend there. We're getting some steepening, so the 30-year is lagging a little bit, like we were talking about earlier in the session. Spoos seem to be liking it too. So where's all you guys that were saying like sell the E-mini, and I was like, why do that before the Bank of Canada decision? Do you understand now why I was saying like now is not really the time to stick your neck out? I should stop. I'm being egotistical now. I should stop. Lots of orders collecting at this level now. In the E-mini, there's a lot of volume at 39.85, isn't there? Yes, sir. The treasuries, it looks like there was a strong buy impulse here, and they've quickly pulled back, and we'll see if they've got more in them or not. I think that based on the volume that I'm seeing and everything, you know, like recently we've been seeing moves of 15 to 20,000 contracts net and cumulative delta today. And this whole morning so far today is still only 10,000 and only 5,000 since the Bank of Canada. So there could certainly be a lot more upside. Dude, I had a rooster and we had to give it away because, you know, the rules in the city are you can't have roosters. It was the coolest because it was a fluffy. So like we wanted fluffy chickens. I actually kind of regret getting the fluffy chickens because they're not good layers. and for me, the best part of the chickens is the eggs. But anyways, there was one chick that was white. The other two were black. So there's two black and a white one. And the white one was larger than the other ones and was more friendly and was the one that you could always hold and stuff like that. So we liked that fluffy, and I called him Jerome Powell. It's the Feathered Reserve, and Jerome Powell was the Federal Reserve president. But when it turned out that he really was indeed a rooster, we had to give him away. I made a video where we used the chicks to try and make financial predictions, but nobody was really interested in it, so I gave up on the idea. I mean, maybe I need to try more than just once, but even with just once, it was like a total dud, so I was like, oh, whatever. On the summary indicator is the first low that Deep Blue it's the pulling. So the outside edges are pulling. So it goes pulling, and then you come in one level, stacking, you come in one level, market orders. So yeah, that big yellow one down there. So what this actually is, oh, I wish I had things set up so I could show you. What you're gonna find is that there are these robots that place orders really far away, as like you know, they want to be first in line, sort of a thing. And so they're stacking way out there. So there's going to be somebody where like way down here at 26 or something like that, they're going to stack or pull stuff. And basically what happens is when it moves too far away from that, they pull it. And so that's why you'll see a bid pulled, and it creates the orange. So I really do think that I should if we're gonna continue to show this for the stream, that I should make one that only shows at maybe the first 10 prices out. You saw a video of Andrew beating up a woman? Really? I've not seen that. I've seen videos of him bragging about mistreating women, though. That's my thing, is that he comes in and he's like, oh, these are all false allegations and yada, yada, yada. But like when you look at the allegations, they're all things that he talks about doing. Like, so you go and you message some girl online, you tell them that they're beautiful, you convince them to come over, and then you use force and coercion to get them into the porn industry. Yeah. Kind of seems to me like he's made a lot of comments basically admitting to sex trafficking. So much so that I'm actually a little bit perplexed as to why so many of his fans kind of were in denial about it, because it's like, look, you guys have watched more of his clips than anybody. You know that he brags about this stuff. Come on. So getting a little bit of two-way action here. There was a little bit of a pause at 10.5 and then a push down that was very short-lived, and now they're back to 10.5. We'll see if they start to balance out here or if more buy orders come in. I think that at least in the 10-year there's plenty more room for more buy orders to come. So let's zoom in on this thing here a little bit and read the numbers. So when the news came, there was about 8,000 and 12,000 that added on offers as we moved up. Interesting. So probably a lot of profit taking up through here, huh? And then there was that huge flood of volume. Yeah. So they stacked up in here, and then the volume came up into it, mostly absorbed, and then they fell back. It doesn't mean that there couldn't be more market orders or that these guys are stuck or anything like that, but it's just interesting to see how that played out. Kind of looks to me like the people that traded that were mostly going for like a short-term move. And I do feel like how much we moved here in micros wasn't enough. Like, we moved way more than that move earlier, and I haven't gotten paid as much. So that kind of sucks. It's the spread working against us is what that is. That first trade had worked out at all, it probably would have been a much larger winner than it was a loser, but oh well. It's graphic. I don't know, man. I don't understand how a video like that could be out and people not be talking about it. You sure it's actually him? It looks like the market sells dried up right before that run. Well, you're right that going into the news, there was kind of like selling, and then when the news came out, it just like it turned into all buy. So this was kind of what we wanted to see, though, was like, what is the change? What is the change in the stacks and pulls when that news happened? Lots of stacks placed on, lots of asks, offers. Maybe we should call them offers. Lots of offers added in here, lots of offers taken off, lots of bids taken off at different points. I think that, yeah, tomorrow, let's not do it today. Well, actually, let's do it right now. It's gonna ruin everything that we got on here. But I'm gonna do a new one. I'm gonna take it off so that like the history gets removed. Let's see here. Alpha Santa Fe. And I'm gonna say max level filter 10. Also, I'm gonna have this bottom margin be 18 so that it doesn't cover up the Ninja Trader copyright. So that's going to erase our past history, but let's see if that's a little bit better, because I think that those big orders that are like really far away are kind of having too big of an impact on the calibrations, so it's kind of hard to see things. Yep, fourth row market sells. Yep. So I tried coloring it like bullish, bearish. It seems to be working pretty well, but you know, I don't know if this is necessarily an indicator that you're going to be able to like put on and like get some big insight that's really going to lead to profitable trades per se, but I think that it's the best reflection of the overall market conditions, and is the best that I can do on a chart of kind of the things that I'm watching. I'm watching to see how many orders am I seeing at stacking, how many orders am I seeing polling, and how do they react when the market orders hit. Yeah, that's the one thing that you really just can't see any other way is, you know, how many offers are put there and then they buy it up, you know, because I'm especially looking for that situation where nobody wants to bid or offer anything at a price for a long period of time. There's no way to see that other than watching it on the DOM. I've never seen an indicator that highlights that situation. Yeah, you could add another one and only have it be 4 deep. I think that how far out you decide to look is kind of arbitrary, you know? I think that in our case, we just want to filter out the ones that are super far away, because there are ones that are like so far away that there's no chance that we'll even touch them today, and they're really big and they kind of screw up everything else. Yeah, 10, but I just switched it to 10, so we'll see what it does with 10. Cool. No, what I had before was everything. I had them as 0, so I just barely switched it to 10. So let's see how it does with 10. I think that 10 should be what I want. So we are getting a little bit of pushing on those highs again, but it hasn't quite broken through, so you're kind of starting to get some signs of like ascending triangle sort of a thing. It does look like the buy orders in the 10-year are still there. It's not the case in the 5 and the 30, but in the 10-year, there's a slight bias to the upside. One thing that kind of sucks about the indicator is that it takes a couple of bars to print before the colors kind of calibrate to where you can really even use them. Because it basically, the lowest number that it's ever had that's not 0 will basically be black, and the highest number that it's seen will be full orange or blue. That's a little too extreme. Okay, so iceberg at 10. Interesting. And why is okay, well, they made it go bid. There wasn't a very strong bid stack there when it ticked up, but they did make it go bid. I'll make it as big as I can with the numbers still showing. The 30-year is lagging a bit. Seems like the volume is there, but they're not being aggressive enough right now to push it up. And on the S&P 500, there was definitely some buying after the Bank of Canada decision, but it's kind of just been, well, and definitely buying. There was like cumulative delta turned bullish, but like they're still hanging out towards the bottom of the range. Are you getting? No, I don't get MBO data. Oh, did we finish the list? So some buys coming through here at 09.5, and they're not able to get through the iceberg, and then they take them down. Yeah, the volume in the 30-year is not what I would like. It still looks okay in the 10-year, but I'd certainly prefer a flood of buy volume to come through here. It's been almost 20 minutes now. You need glasses. Why are you trying to zoom in? You care too much about the specific numbers, man. How about that? Really, I would need to make the numbers. Well, I probably could make the numbers. Let's see here. It looks like if I change the text size to like 14, that are probably still, it would be fine. Yeah. There you go. So what I think we're getting right now is that there was an iceberg up here in this location at 10, and now we moving away from it, right? But we're starting to see volume transact here at 08.5 and 09 as well. This is not too dissimilar from what we've seen yesterday and much recently, where there's just like way more activity and iceberging in the treasuries than, which I guess is good, but we'll see if they recover the 10 again or not. Doesn't really look too good though. Yeah, look at that. So there was an iceberg at 08.5 and they swamped right through that, man. It wasn't as big as the iceberg that was earlier, but that was a decent amount of volume that just traded there. Did your data feed just die, or is the market real? No, we're moving. We just had a big iceberg trade at 08.5. Where did we get some? Oh yes, oil inventories in 5 minutes. Fun stuff. Is it dead on your end? Well, I would say that things are relatively quiet compared to what they were 30 minutes ago, but there's still volume trading. I mean, like, you should definitely be seeing stuff trade on your DOM, right? And in particular, I'm seeing like lots of icebergs transact here. It looks like they're more on the bid side, so like a passive buyer here. So look, there's an iceberg at 09 too. How big do you think? Do you think they'll clear it at 09? How much will it take? I'm sitting here thinking, wouldn't it be fun if there was like a 5K iceberg at 09 and they got through it? But then I'm like, no, that would actually really suck. Let's not have the icebergs. Let's just go back up to the highs, please. The volume, aside from that iceberg that we just had where they sold about 3,000 contracts into the bid, the market orders have been very much tilted to the long side. So I'm starting to get a little uncomfortable just because the flows aren't seeming to be very predictive of where we're going and so forth. Like, not only am I not seeing the flow that I want, but that the flows that I am seeing seem to be, you know, having a fuzzy impact on prices. There's ZB picked up a little bit there. So Nick Timmerose just requoting the Bank of Canada, but Governing Council expects to hold the policy rate at its current level while it assesses the impact of the cumulative interest rate increases. So let's just pretend for a second that that was the Federal Reserve that said that. If the Federal Reserve said we expect to hold the policy rate at its current level while it assesses the impact of cumulative interest rate increases, that would be a huge deal, right? Because that would mean that they're not going to raise interest rates in March. So buying in the treasuries in particular is very much justified off of that Bank of Canada move, but it was short-lived. Whoa, almost a 5K. Okay, 4,400 to 07 half. Well, you never know. With an iceberg like that, you know, they can fiddle around with it in that area for a little while, but the amount of sell orders that we just saw come through off of all of that is very disappointing to the trade that we're in. Yeah. 4K. I wanted it to be like on the offer. Fine. I mean, icebergs are so interesting, right? Because on one hand, like, that kind of absorption should be a bullish sign, right? But it's kind of not. It's kind of isn't. It kind of isn't. And by the time you know whether it really was a bullish or a bearish thing, it's too late. It's already moved away from it, right? Well, they took it bid again. We'll see. We might see them fiddle with that price a lot. So I'm going to reset things so my line is right underneath those 7.5. But yeah, right now the market, there's more market sells. Like, it was a very, very slow and steady buy, and then all at once back down. That's like the most frustrating type of trade. Like, if you're long right, you're sitting in it for a while, it's grinding your way, you're like, it's okay, and then you know, all of the progress is lost all at once. Well, they're trying to get back through it, but it looks like there's a little bit of sell side iceberg in there now too. Oof. A very aggressive down flip right there. The offer was looking weak, and then all of a sudden they just sold the... I thought that my news quack was about to give me some breaking news, but they didn't. We seeing something in the dollar here? The dollar is moving up. 6J is moving up. Well, I feel like I've already given this more room than I should have, right? So looks like there's somebody at 3451. We'll hit him. Disappointing. I tell you what, I mean, we had a good trade yesterday. We had one good trade and 3 bad ones, and they kind of canceled each other out. I think today we're just gonna have 2 losers. I don't seem to be on a good streak. There must be less directionality in this flow than I'm anticipating, is I think should be my takeaway from here, right? So we had all of that up volume and now it's completely swept back down. So I'm thinking that I have an edge in here, and I, you know, it's really not like the Bank of Canada, it looks like was really not strong enough to create the consistent flood of buy orders that I thought, right? And the E-mini pushing those lows again. I don't know. Some of this action kind of suggests to me that like the Bank of Canada doesn't matter. Like the E-mini doesn't seem to really actually care about it, right? They're just selling for whatever reason it is that they're selling. Although I really can't sort out because the volume in the ES is not to the downside. So, but again, when I'm seeing price and volume not in line with each other, that's not a good sign for a trade, right? That's kind of a sign to just stay out. The other thing is that there has been a lot of kind of like slippery action in the treasury, right? Like this move down has been a good consistent downtrend, but even that, it was like 2 points at which it really slid the most. So you blink and you miss it, right? Look at that. Just thinking through what would be flows that would be responsible for the bearish, for the selling. Well, so that ask selling at 835, I think, had to do with that iceberg, right? It's about equal to the amount of iceberging that we saw. You're not talking about the one at 835? The one that's bright orange? Yeah. See the thing that again, when we make something like this, what happens? We want to apply technical analysis to it, right? So we can't sit down and say, okay, when I see this bright number, that means it's going to go this way or anything like that. But the thing that I am noticing is that there is more activity on the offers. There is high amounts of both stacking and pulling on the ask very much so compared to the bids. So the people on the offer side seem to be really active in shifting around, and the people on the bid are just kind of being nonchalant about it. Which I suppose means that the sellers are more interested right now. And that was they continue to slice through some pretty big icebergs as well. So this sucks because it's like, at what point do you come and take it now? The other way? I could see them right down at the lows pretty easily here. I think you have too much emotional scarring from the fluffy chicken. You know, before you guys even say that, I'd totally forgotten about the fluffy rooster, man. I rarely go out there, and my wife likes the chickens more than I do. There's a lot of selling, guys. I really want to jump on board this, but I'm really not sure I can justify it anymore. I kind of feel like I got it wrong today, and I should just save myself. There is only 20 minutes left, so that's what I'm gonna do. I'm gonna make the hard decision to say I don't have it today and stop. Oh yeah, I mean, it's definitely downtrend today in ES. You never know, though. Those flows can shift awfully quickly, right? Especially during earnings season. Good grief. This thing in the treasuries, though, is a little bit more... I don't know, man. I guess higher interest rates make sense. I mean, that was kind of the way that I was leaning to begin with. But we're basically the same spot we were before. I'll keep an eye on it. If I see an opportunity to maybe pick somebody off, I might go for it. But because, you know, now that we're on the downtrend, you know, I think that 115 even looks awfully attractive, right? Spread in the micros is close. I'm moving pretty tick for tick with the treasuries right now, so. I don't think it's washing. One of the things that you will see is spread trades come through. So you can get a lot of volume in an area that's not actually as significant as it appears because it's a part of a spread trade. So the amount of money that they're actually putting at risk to execute that trade isn't as much as you think it is. So just note that there has been some stacking down here in the bids. Subtle. I wonder where... Well, I would like to do a lengthy video on spreads, but I don't really feel like I have enough value to offer there on regards to the spreads, other than the stuff that we've already made. Probably should make another video about using our spread indicator at least, but. And on yields, I guess we kind of had a video about the treasuries already that I think gives you a lot of information about the yields. One of the things that I find really interesting about the treasuries is that, like other instruments, there's more liquidity at even numbers and all that, but the thing that's unique is that you've got even numbers on both price and yield, and they seem to react to both. You guys and the chickens. Why weren't you interested in the chickens when I was making the chicken content, huh? Curious. Sure seems like the bid offers fidgeting a lot in the micro, but I really want to buy it right there, but we really don't have enough time. I already took the $15 loser. The $10. Is that a $25 loss today? $30 loss today. That's not good, guys. Don't like that at all. That's two. I mean, yesterday it came out break even, but that's 2 bad days in a row. I'm not quite sure what my deal is. That seems like unusually bad performance. I mean, I guess today we've seen it both ways, so maybe my issue is that I really just need to wait for a more trendy market. Which may mean that we have to wait until after the Federal Reserve meeting next Wednesday. I mean, I guess we kind of saw the activity that we were expecting today. It just didn't play the directions that we wanted. So now that we've got a little bit more data, we can come in here and kind of look at this. Well, so you can see this spot where like the bids started to become more active and they stopped there. I know. So I originally created these rows for D, and the metric that D is looking at, it looks cooler. This one, there's a lot of randomness to it, isn't there? Yeah, there's a lot of randomness to it. You only get a few select points where it really stands out. Yeah, so like I'm tempted here between 57 and 46, 46 even, but it's a little too sketchy. I only have 5 minutes. So you're just gonna have to do it without me. If you're gonna sell it, you have to do it without me. Sucks too. I had some positive. Oh yeah, in fact, 14 ticks. Actually, 14 versus 17 is not very good, is it? I don't know, guys. Something about this market we don't understand, and we need to figure it out. Wow, oil's going after that oil report. Almost to 81 now. So let me tell you something. This is something that I think is kind of weird. Is that over the past week or so? Look, there it goes. You ever close a trade and realize you didn't actually close it and made more profit on the trade when? I don't think I have, actually. I think that every time that I've ever made a mistake like that, it was bad. Yeah, I'm a little frustrated because I feel like this is gonna run now. Like, there was some aggressive selling to start this off with, and who knows if we get another leg, but so far they haven't really paused too much. It's just been a slow grind lower, and the timing of it is just poor for me. Really, we should have been, you know, the only way that we would have made money here is if after the Bank of Canada we had decided, no, it's a sell day, and sold it. And you know, there were points earlier in the day where I thought it was a sell, but I don't even remember why now. I don't think there's any way that I would have made that counter trend trade, essentially. Some more iceberging at 03, huh? This time the bid, the way bigger one on the offer though. So maybe a buyer is deciding to take shots here. Ooh. 5Ks both sides, haven't seen that in a while. Now this is sky. Oh look, here's my Elliott waves. Nobody cares. Nobody cares. Nah, this guy has no clue what he's talking about. He thinks that the Fed is going to go back to 75-point hikes. Why would they go back to 75-point hikes? No. All right. Not happening. This is at this point, it's a question of when, not if, they go back to no hikes. If not, decreasing rates. Well, that 02 half is now traded at 6,700. So it looks like there's two big guys filling each other here down at the bottom. Really, that's what it took. It was getting all the way to the bottom to entice the buyers, I guess. Trump defends innocent man Pence. Leave him alone. Oh, that's interesting. Looks like this is going to be a monster on both sides, man. You're right. What would be this fluffy chicken square root? Okay, there they took something off her and hit into 02. It ended up being almost 8K. Little bit of pushback there. That's interesting. So somebody put out 488 and they bought it back up before I could even see it on the DOM. Can you believe that? And it sells again. Looks like the seller is just firmly in control despite all of that iceberging there, man. If I had taken the trade that I was thinking of, it looks like I might have been able to make 10 bucks. So that's actually surprising that it moved that far in that time period. Although so much traded at 0.2 half. They're going to come back to it and we'll see how the level 2 behaves, but that's really likely to start becoming a stumbling block, and you see a lot of, you know, action just rotate around that specific price, right? Big icebergs like that, both sides, very likely to create a liquidity hole, especially if it starts trading it more. If the sellers want this to continue going down, they've got to keep those offers really firm. Which they're not doing too bad of a job at so far. Yeah. Let's see if there's another tick up. If there's another tick up, that might kind of give us the sign. No, bid and offer both still equal. I don't know, just based on what I just saw there, I think that the rates are probably going to continue rising here today. Because this has been a pretty consistent downtrend, kind of seemingly out of nowhere, and any of the points at which it seemed like it might let up, and it just doesn't come through at all. The buyer's really not there. Somebody definitely was there at 0.2 half, but who knows? Maybe that was somebody exiting a trade or something. I don't know, but they're not. Buyer's not really too active here otherwise. Like, look at the bid stacks and offers. This is still a ghost town. So, well, guys, I think that's all we got for today. Disappointing day for me. Yeah, the change in cumulative, well, I mean, what, we went from 117 to 132, so we've traded about 20k, roughly speaking, but it was like 20k to the upside, 20k to the downside. There's must be you know, action that had nothing to do with the news, right? They were just waiting for the Bank of Canada to be over with before they started executing it. So kind of more of a passive flow that I just wasn't expecting. I'm not sure what's the driver for it, but you say it's spreading with CT. Well, the thing is, when you look at the 2 and 10, it's still steepening. None of this downside move has resulted in flattening in the yield curve. So, all right, guys, I didn't even know what to put on today's title. Bank of Canada and choppy market. That's how I feel about today. I don't have a great really anything super cool to say. I'm sorry, guys. I feel like such a failure. I'm such a failure. No, tomorrow's another day. All right, so I'll see you then. In the meantime, stay excellenting.